If you've recently left the world of group health insurance behind, then one of the most shocking things is how expensive health insurance can be. But one of truly the best ways to save money on health insurance is through those premium tax credits. But are you eligible and how do they work? Well, let's talk about it. Premium tax credits are just a tax credit that is paid up front. This is reflected in a highly discounted monthly premium. However, it's very important that you estimate your MAGI for the upcoming year as accurately as possible. And of course, that can be pretty tricky. And what exactly is your MAGI?
So your MAGI, which is your modified adjusted gross income, for most people is going to be identical or very, very similar to their AGI, which is just your regular adjusted gross income, which is the number you use when you file your taxes. So you need to include in your estimate basically the entire household, the tax filer, the spouse if they have one, and their tax dependents, including those who don't need coverage. You have to include the income of the entire household. Now, what income types to count in your estimate? Alimony, capital gains, if you've sold a house, excluded untaxed foreign income, federal taxable wages, investment income, rental and royalty income, retirement or pension income, self-employment income, Social Security disability income, any tips that you may receive if you are a waiter, bartender, hairdresser, etc., and unemployment compensation. Now, you don't count alimony for divorces and separations prior to 2019, child support, child tax credit checks, gifts, proceeds from loans, supplemental security income, veterans disability payments, or workers' comp.
Now, if you overestimate your income and you end up making slightly less than anticipated, it's actually not that big of a problem. Basically, you were probably entitled to a slightly larger premium tax credit, so you may just receive a larger refund when you file your taxes. However, if you underestimate your income and you end up making more, then you may actually have to pay some of those premium tax credits back when you file your taxes. Now, to avoid a very unexpected and unwelcome tax bill, we highly recommend that you make sure to keep your information on Healthcare.gov as accurate as possible. So if there are changes in your income, your household size, or your location, make sure to update your account on Healthcare.gov as soon as possible. With all that being said, let's head over to Healthcare.gov so we can see how those premium tax credits work. A brief pause here. Another way, other than those premium tax credits, to save money is to work with a broker. Now, we are licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. So if you have questions, you can reach us in the comments below. We'd love to hear from you, or at the number on the screen. Additionally, we do release these videos on a weekly basis, so please, please, please make sure to subscribe and, of course, like this video so we can get this information out there. All right, let's get back to it.
So on Healthcare.gov, if you see where it details premium tax credits, if your income is between 100 to 400% of the FPL, which is the federal poverty level, then you will qualify for a premium tax credit. Now that has been expanded, so even if your income is above 400% of the FPL, you may still now qualify for premium tax credits. They just may be a smaller premium tax credit. This is what used to be known as the subsidy cliff, which has more or less been done away with, thank goodness. So if you wanted to learn more about the FPL, basically it is determined by your household size and your income. So effective as of January 15th, 2024, so these numbers may change, if you had a household size of 1 and you made $15,060 per year, that would put you at 100% of the FPL. So that, of course, would qualify you for a premium tax credit. Now, the larger your household size, the larger your income to put you at 100% of the FPL. Remember, we're talking about all the way up to 400% and really more than 400%, just a smaller premium tax credit. So what would put you at 400% of the FPL for one person would be $60,240, and all the way up to 8 people would be $210,880. And again, even if you made more than 400% of the FPL, you may still qualify for some type of premium tax credit. So you can see that most people really will qualify for some type of premium assistance. Now, if you actually go to Healthcare.gov where it says browse plans and costs, we're going to put in, let's say, a Florida zip code. Okay, now you can of course skip these questions, but that's going to show you the full price plans, and the topic of today's video is premium tax credit, so we need to answer some of these questions. Let's start. Okay, we're going to skip this plan ID from last year. Let's say it's us and other people. Continue. Are you married? Yes. Continue. Will you claim any dependents on your federal tax return? Yes. Let's say one, actually. Continue. So tell us about you. Sure. 35-year-old male, legal parent of a child. Continue. Married to a 35-year-old female who is also the legal parent of a child. Continue. And we put in that we had one dependent. Let's say we have a 5-year-old son. None of these, of course. Continue. We're going to confirm that this information is correct. And now let's say we put in $80,000. Right now, $80,000 does seem to be the median household income in the United States. And actually, the household size seems to be hovering between 2 to 3, but obviously I can't put in 2.5, so I put in 3 for a married couple and a single child. Continue. So look, based on that, you would be estimated to receive a premium tax credit of $840 per month. Now, of course, if we were to go back, let's say we made a lot more money. Almost double, $150,000 for that household size. Look, we're still eligible for a premium tax credit. It's just a much, much smaller premium tax credit. Now let's go back and say that we made much less, $40,000. Well, actually, it's recommending that we look at Medicaid programs and CHIP specifically based on our financial income. So it's saying to look at Medicaid or the CHIP program, that would be specifically for the dependent. And then for the 2 adults, you would receive that $942 per month premium tax credit. Additionally, you may see things like this. You may be eligible for extra savings if you pick a silver plan. If you see this pop up, I highly encourage you to take a stronger look at those silver plans because basically the way that the metal tiers work, you have bronze, silver, gold, and platinum. Bronze plans, there's a 60-40 split for coinsurance. So your insurance carrier pays 60% and you pay 40%. Silver at 70-30. Gold, it's 80-20, and platinum, it's 90-10. So ordinarily, a platinum plan would have the most advantageous cost sharing to you as an individual. But if you're eligible for these extra savings with silver plans, then actually a silver plan may offer you enough cost savings that is even better than a platinum plan. So definitely take a strong look at the silver plans if this pop-up shows up for you. I'm going to go back to where I put in 80,000 before. Continue. All right, view plans. Let's just skip this. And then you'll see here that it is showing you your premium for your whole family. That's not per person. And that is with that tax credit applied. So without that tax credit, this plan would have been $943.64. With that very large premium tax credit that we are eligible for based on the information that I put in, it knocks it all the way down to $103.64 per month. Now, right now it's filtering by lowest premium. So this is the plan available to us with the lowest premium. So again, just based on the information that I have put in, you could filter by lowest deductible. That puts us up to $391.65. Let's see, I'm gonna go back to this. 178 plans. Look, I'm going to skip ahead. You won't have to go through all of this. The most expensive plan was $297.16. That is a huge difference. Quite a spectrum from that 100, what was it? 100 and some odd dollars. Bear with me. Yeah, so from 103 all the way up to about $2,000. It's a pretty broad spectrum, but that is with a pretty large premium tax credit.
Now, if you are ineligible for a premium tax credit, then marketplace plan premiums may just be too expensive. And if this is the case, if you're under a certain age, you may want to look into a catastrophic coverage plan through the marketplace. Basically, you'll have a much lower premium with a much higher deductible. However, you'll still be entitled to at least 3 visits with your PCP, which is your primary care physician, prior to meeting that deductible. And of course, you'll have an out-of-pocket maximum in place to protect you from major medical bills should the unexpected happen. Additionally, if you're ineligible for a premium tax credit, then you may just want to look at a private insurance plan. Traditionally, these would be more expensive than a marketplace plan, but if you're ineligible for a premium tax credit, they may be comparable. However, very often private insurance plans will offer you much more flexibility, and of course, you'll have a higher likelihood of accessing a plan with nationwide PPO coverage, which is unlikely on the marketplace. although that has been changing as of late. There are also plans that are sort of lump sum payout plans, things like hospital indemnity plans or critical illness plans that you may want to look into instead. If you'd like to learn more about those, I highly recommend you check out this video over here to learn all about your health insurance options. If you want to learn more about marketplace plans specifically, make sure to check out our marketplace playlist. As always, if you have any questions, you can reach us in the comments below or at the number on the screen. We are licensed nationwide and there's no charge for our services, so that's a great way to save money as well. In the meantime, please make sure to like and subscribe to stay up to date. Thank you so much for watching and have a wonderful day. Bye-bye.